Hey everyone, and welcome back to the channel. Today we're tackling a question I get all the time. How can I start investing if I only have $100? You're in luck, because in 2026, $100 is more than enough to get your investing journey started. In this video, I'm going to give you a complete step-by-step guide on exactly how to turn that $100 bill into a powerful wealth-building tool. So grab a notebook and let's dive in. First things first, let's crush a common myth. You do not need to be rich to start investing. The most important thing isn't how much money you start with, but how early you start. Why? Because of a magical little thing called compound growth? Imagine your money making money, and then that new money also starts making money. It's like a snowball rolling down a hill, getting bigger and bigger over time. Starting with just $100 today can grow into a surprisingly large amount over the years, far more than if you waited a decade to start with $1,000. The key is time, and the best time to start is right now. Before you invest that first dollar, you need to have a clear goal. What are you investing for? Are you saving for a down payment on a house in 10 years? A new car in 5? Or maybe you're thinking long-term, like retirement in 30 or 40 years? Your goal will determine your investment strategy. Short-term goals, you might want less risky investments. For long-term goals, you can generally afford to take on a bit more risk for the potential of higher returns. So take a moment and think, what does financial success look like for you? Write it down. This will be your North Star. All right, now for the exciting part. Where do you actually put your $100? In 2026, there are more beginner-friendly options than ever before. Let's break them down, starting with one of my favorites for beginners, robo-advisors. A robo-advisor is an automated, algorithm-driven financial planning service. That sounds complicated, but it's actually super simple. You sign up, answer a few questions about your financial goals and your comfort level with risk, and the robo-advisor does the rest. It builds you a diversified portfolio, usually with low-cost exchange-traded funds, or ETFs, and automatically manages it for you. Think of it as having a digital financial advisor without the high fees. Many robo-advisors have very low or even zero account minimums, making them perfect for someone starting with $100. They take the guesswork out of investing and are a fantastic set-it-and-forget-it option. Next up, let's talk about fractional shares. Back in the day, if you wanted to buy a share of a big company like Amazon or Google, you might have needed thousands of dollars for a single share. That was a huge barrier for new investors. But now, thanks to fractional shares, you can buy a small piece of a share for as little as $1. So with your $100, you could own a slice of Amazon, a bit of Apple, a piece of Tesla, and so on. You can build a portfolio of companies you know and love without needing a ton of capital. Most major brokerage apps now offer fractional shares, so it's incredibly accessible. This is a great way to dip your toes into the stock market and learn how it works by owning pieces of individual companies. Another fantastic option, especially if you want to make investing a daily habit, is using micro-investing apps. These apps are designed to make investing small amounts of money incredibly easy. One popular feature is the Roundup tool. Let's say you buy a coffee for $3.50. The app will round that purchase up to $4 and automatically invest the extra 50 cents for you. It might not sound like much, but these small amounts add up significantly over time. It's a brilliant way to invest without even thinking about it. You can link your bank account, and the app will just passively build your investment portfolio in the background of your life. With your initial $100, you can get the account started, and then let the roundups do the rest of the work. Now, we can't talk about investing in 2026 without mentioning cryptocurrency. I know it can seem intimidating, but let's demystify it. Cryptocurrencies like Bitcoin and Ethereum are digital or virtual tokens that use cryptography for security. It's a much more volatile and risky asset class compared to stocks, but it also has the potential for very high returns. If you have a higher risk tolerance and are interested in this space, you could consider allocating a very small portion of your $100, maybe $10 or $20, to crypto. Never invest more than you are willing to lose. You can easily buy crypto through a variety of exchanges and even some of the mainstream investing apps. Just be sure to do your own research, understand what you're buying, and be prepared for a wild ride. It's not for everyone, but for the adventurous investor, it can be an interesting part of a balanced portfolio. So, let's recap our main options for that first $100. You've got robo-advisors for hands-off automated investing. You have fractional shares for buying pieces of your favorite big-name companies. You've got micro-investing apps for making investing a seamless, daily habit. And finally, you have cryptocurrency for a small, higher-risk, higher-reward bet. Which one is right for you? Depends on your personality and goals. If you want simplicity, go with a robo-advisor. If you want to be more hands-on and pick your own stocks, fractional shares are your best friend. If you struggle to save, micro-investing apps can automate it for you. Once you've made your first investment, what's next? The journey doesn't end there. The key to long-term success is consistency. Try to set up a recurring deposit even if it's just $10 or $20 a month. Automating your investments is the single best thing you can do to ensure you stay on track. This practice is called dollar cost averaging. By investing a fixed amount regularly, you buy more shares when prices are low and fewer when they are high. Over time, this can lower your average cost per share and reduce the impact of market volatility. It removes emotion from the equation and turns investing into a disciplined habit. As you continue on your journey, it's vital to keep learning. The world of finance is always changing. Follow financial news, read books, listen to podcasts, and watch educational channels like this one. The more you know, the more confident you'll become in your decisions. Don't be afraid to adjust your strategy as you learn and as your life circumstances change. Your investment plan should be a living document, not something you set in stone and never look at again. Revisit it at least once a year to make sure it still aligns with your goals. Now, let's talk about a crucial topic: fees. Fees are like termites for your portfolio. They can eat away at your returns over time without you even noticing. When you're choosing a platform, whether it's a robo-advisor, a brokerage, or a crypto exchange, pay close attention to the fees. Look for platforms that offer low or no trading commissions and low management fees. For ETFs and mutual funds, check the expense ratio. This is an annual fee expressed as a percentage. Lower expense ratio means more of your money stays invested and working for you. With only $100 to start, every penny counts, so being mindful of fees is absolutely critical. Let's put this all together into a practical action plan. Step 1. Define your investment goal. Write it down. Step 2. Choose your platform. Do you like the idea of a robo-advisor, fractional shares, or a micro-investing app? Do some research and pick one that fits your style. Step 3. Open and fund your account. This process is usually quick and can be done entirely from your phone. Deposit your $100. Step 4. Make your first investment. If you're using a robo-advisor, it will do this for you. If you're using a brokerage, pick a few companies or a low-cost ETF you believe in and buy your fractional shares. Step 5. Set up automatic recurring investments. This is the secret sauce. Even $5 a week makes a huge difference. I want to leave you with a final thought on mindset. The stock market goes up and down. It's normal. There'll be days, weeks, or even months when your portfolio is down. Do not panic. Panicking and selling at the wrong time is the #1 mistake new investors make. Remember, you're in this for the long haul. Market downturns are actually opportunities to buy more shares at a discount. Stay calm, stay consistent, and trust the process. Your future self will thank you for the discipline and foresight you show today. Starting with $100 is not just about the money. It's about building the habits and the knowledge that will serve you for the rest of your life. So there you have it, a complete guide to starting your investment journey with just $100 in 2026. It's simpler and more accessible than ever before. The most important step is the first one. Take action today. Don't wait for the perfect time or for when you have more money. Your journey to financial freedom can start right now with that $100. You've got this. Thank you so much for watching. I hope you found this guide helpful and empowering. If you did, please hit that like button and subscribe to the channel for more content on personal finance and investing. Thanks again, and I'll see you in the next video.